Alright guys, this is kind of crazy, my first YouTube video, but today I'm going to be showing you guys how I trade reversals, top ticks, and bottom ticks. So right now we are kind of just looking at this level. So this is kind of right around the time that I signaled out that, we're going to do 191 shorts. So how do we identify that? So we have this great tool called the Fibonacci retracement. Sorry guys, I'm not like great at explaining stuff, so okay. So a couple things we need to identify is a swing low to a swing high, a higher low to a higher high. So when we do this, we're going to mark our OTE. Now we are looking for a bearish trade, right? So originally we're looking for bearish trades. We're going to mark the opposite. So we're going to go from the low to the high. So when it comes to marking these Fibonacci retracements, it is important to understand just kind of where to anchor these marks. So what I'm looking for here is a leg, right? So I got this leg to the upside. So then I'm looking for a bearish trend. So we got this higher high with a higher low. So I'm going to mark from the higher high down to the higher low. I'm marking the wicks of the candle. All right. Okay. So what you're going to notice immediately is this 191, 195, 204. That is our golden range of entry. So we need a little bit more confirmation. We can't just go off of OTE. So that's what our next Fibonacci tool comes into play, our standard deviation. I will also show the settings here. Okay, so what that means it is anchored on this body, like the lowest point of this body, because we obviously got the higher low. So if it's a higher low, looking at the lowest price of that body that it, I don't know if I'm making sense, but we mark it from the body to the top of this body. Okay, it kind of makes sense. So if you're marking from a higher low, do the bottom of that candle's body. And if you're marking to a higher high, do the top of that candle's body, vice versa. All right, so now we have our first stack of levels here. So we have a 191 of our OTE and 191 of our standard deviation. But we're not quite done. All right, so I like this 191 level so far. What we're going to do next is we're going to head over here. We're going to look for this 191 in the price. All right, now it's not going to be perfect, but I'm going to draw a horizontal line. This kind of just tells me, this kind of gives me like an easy line, I guess, to go off of. Why this line is really good is it not only shows like the 191 level, but if you look closely here, right, the opening of this 4-hour candle was right at 191 basically, and on these 1-hour candles we kind of just tell that we're starting a bearish trend. Now I'm going to go over and confirm that on the 1 hour that you would be in a bearish trend, which we're kind of really not. So that's a little like opposite of what we're looking for, but don't fret, because now what we can see on this 1-hour candle, we have an SMT. Important. It tells us we're looking bearish. Okay, so we have bearish SMT, we have a swing high, swing low, we have our standard deviation and OTE marked out. Now, what are the levels we're looking for? So we're going back to that 15-minute time frame. 15-minute time frame is great for marking these levels out. We have a couple more levels here. It's A level and the L level. Now, what that tells me is we have 4 different confluences telling me 191 is a good price. So what we're going to do, we are going to place a short position. We're just going to, I usually target 45 points when it comes to this. I know this is a 400-point move, but we're going to target 45 points with a 15 stop. But typically I do run a 15 stop, but what I notice here is we have this level, right? This level right here is a little risky because we have this order block. And when it comes to scaling into this trade, now obviously this isn't going to be this size contracts I was running on this trade. I think I only ran 2 micros, but when you were looking at that stop loss and you're figuring out, okay, where can this price range to, make sure you have that when you are marking this this entry out and you are placing your stop loss, maybe it's 15 points or it's 25 points, however many points you really need. I say 15 is safe, but you might need a little bit of wiggle room. It is very important to know that when you are marking these out with your stop loss, make sure you're not oversizing, right? I'll see people throwing like a mini on here, and that's not what we want to do. Now let's say you have you're on a fresh 50K account, you have $2,000 a drawdown, you could get wiped out. Like, you could get wiped out with a 60-point move. As you can see, this order block 60 points. So I'm trading. This example is on the NQ, but I typically trade micros, and I only did 2 micros for this, especially in overnight trades. Overnight trades is a scary sell. All right, so we're just gonna let this ride. It's just kind of happening. We got filled. Okay, so we got filled right up here, and what's very important to notice is we went into a little bit of drawdown, right? So the amount of drawdown we went into, I can't really tell you, but we got up to 205. It's right by where our stop loss would have been. We were a point away from being stopped out. That's why that 15 is really important, but it's never a bad idea to run up to the order block. And so if we just continue this trade, you're going to see we dump. This was a 400-point move. Now, it did retrace back up there, but which would have been another good entry point. Yeah. So that is kind of how I run my standard deviation with my OTEs and just some other key levels to look at. One key thing I want you guys to remember. If there's anything you learn from this video, watch more videos. I'm not the best explainer. I want you guys to go out there. I want you to watch standard deviation, OTE, and maybe average range, RTH highs, daily opens, understanding how to trade off of that. T-Trades is a great YouTuber, and he can probably have some videos out there for you guys to understand.